Good morning. I have come with the explanation for module 6.5, that is computation of leave salary. I told you module 6 we are dealing with the salary computation. Module 6.1 I have explained the basic things about salary, the definition of salary, what all are included in salary, what are the features of salary income. Module 6.2 I have explained provident fund. 6.3 we have learned computation of gratuity. 6.4 we have learned computation of pension. And 6.5 we are dealing with encashment of leave salary. Tax computation for leave salary. So this is very important. Sometimes you will get this as a section B question, and sometimes in the full problem when we will do salary problem, this will be there for the, there you have to consider this computation also. So that is the importance of this computation. So theoretical aspects also I will consider, and I will explain, and we will do 3 problems. So that will make it easy for you to understand. So here you have to remember, so leave salary, what is leave salary? When I explain the basic concepts of income in the first module, I have explained this concept, what is leave salary. So I told you employees are entitled to different types of leave. Usual leaves, if you take, casual leave is there, earned leave is there, sick leave is there, paternity leave is there, maternity leave is there, sick leave, so many types of leave. But our comparison is based on casual leave and earned leave. Now earned leave is possible for government employees. So if I'll explain with the concept of earned leave. So in the private organizations also employees will get this leave. So the comparison is between casual leave and earned leave. Casual leave, the usual rule for an organization is you don't have to give prior notice if you're taking a leave. See, today morning, if I feel like I don't want to go for work, I'm not feeling well, I don't have to give prior notice. The next day, when I'll report for duty, I can say that I was not well, I didn't come. I can submit the leave form. Whereas, if you're taking a leave for a long number of days, then it's your duty and it's a rule to inform the management that you will not be coming for duty from so and so date. So you can specify the reason also. Based on that, you have to get approval, then you have to go for leave. So that is the usual arrangement. So casual leave, usually in our case, if I'll explain, in my case, if I'll explain, I'm entitled to 15 days of casual leave. Whereas earned leave, when I'll work, I'm a state government employee. So when I'll work for a year, 2 months of annual holidays will be excluded. 10 days of leave will be credited to my account. That is called the earned leave. So it's like a bank account. See, for example, 1 year when I'll work, 10 days will be credited to my account. So now I told you it's my 28th year of service. So 280 days of leave should be there in my credit, earned leave. But it's not so. I got some 190 days or something. Now what happened? Why it's not there in my account, 280 days. So I'll explain that why it is not there. See, sometimes when I'll take a casual leave, sometimes if I'm sick, I may not be able to go and report on the next day. So sometimes I may take leave for 5 days, 6 days at a time. See, for example, if I'm taking a leave on Friday, so and I'm reporting on Tuesday, next Tuesday. So Friday, Saturday, Sunday, Monday. 4 days is the leave. Because in between, when you're taking leave, in between any public holiday will come, Sunday will come, it will be considered as a holiday only. It will be considered as a leave only. The holiday concept will not come in between. So Friday, Saturday, Sunday being a holiday, that also is a leave. Monday, 4 days leave. And Tuesday only you are reporting. So casual leave, the rule is that more than 3 days you cannot claim casual leave. So if you're taking more than 3 days casual leave, automatically it will go to earned leave. So 280 days leave I should have been in my account, but that 4 days is credited. Like this, so many times I will take the leave. When my casual leave will exceed 3 days, it will reduce automatically. Sometimes it will be hospitalization, sometimes it will be death of a family member. Sometimes we may have to do some other responsibility so that our leave will get extended. So that will be debited from my earned leave account. That is how we are getting the number of days decreased in the earned leave. So now there are 2 options. See, now this lockdown period, you have heard that. Moratorium, we have heard that, bank loan. Similarly, government has made certain announcements regarding the salary payment for state government and central government employees. One thing I already told you, they have they have cancelled the DA increment for 3 increments. What all they announced, they cancelled that. So that is one thing. Second one is encashment of leave they have announced. So that also they cancelled, because so much money, if employees will encash that leave, so much money will the government has to give now to the employees. So that also they have cancelled. Two major decisions came for salary from the central government. Is one is cancellation of 3 DA installments. One is cancellation of this leave encashment announced by the central government. Now, leave encashment, there are two types. You can encash your leave. See, I told you I have 190 days leave in my credit. If I am in need of money, I can encash 30 days leave. That meaning I am entitled to get extra 1 month salary. So that I can utilize for anything. If I need, I can utilize that. Whereas, but you have to remember that while in service, if you are encashing your leave, it will be fully taxable. You have to pay tax. But if I am not in need of money, I can keep this leave till retirement. At that time, 10 months equivalent to the leave if I have, I can encash that and it will be completely tax free. That meaning 300 days leave I can encash. 10 months salary I will get, that will be completely exempted from tax. So I got two options. If I am in need of money while in service, I can encash, being a government servant. That will be completely taxable whether I am in government sector or in the private sector. But if I'll encash leave at the time of retirement, then that will be exempted being a government employee. But in the private sector, while in service or at the time of retirement, they are getting leave encashment, meaning they have to pay tax. Certain exemptions are there. That is what we are going to claim. That is what we are going to compute that. So this is the module and this is the concept, encashment of leave. So leave also we are accumulating and we can make money out of that. That is the concept. So we call it as encashment of leave in the income tax concept. So this what we are going to explain with the help of PowerPoint presentation, and 3 problems we will work out. With that the concept will be clear. You will not get very difficult questions and all. See, we cannot take fraction of the month for computation and all. That computations will become difficult. So being a undergraduate students, we will not get this difficult questions. So whatever we can expect at your level only we have included. Please remember that if you learn those concepts clearly, then that is enough for your examination point of view. So I'm going to explain with the help of PowerPoint presentation. So leave encashment concept I have explained. So one thing you have to remember, for state and central government employees, it is exempted if received at the time of retirement. I have already told you 300 days leave I can accumulate. And at the time of retirement, I can encash that for 10 months salary. 300 divided by 30. That is how I am getting 10 months salary. It will be completely exempted being a government employee. Now you have to remember, if it is received while in service, it will be taxable for both government and non-government employees. This concept also I have explained. If you are in government sector or if you are in private sector, it will be taxable if you are encashing your leave while in service. Next point is for other employees, it will be taxable. That meaning private sector employees, even if received at the time of retirement. So retirement time, if private sector employees are getting their leave encashment, it will be taxable. So these are the concepts we are going to explain. So continuing with the explanation, tax exemption. Out of the amount received, least of the 4 will be deducted from the amount received and the balance will be taxable. So this you have to remember that 4 exemptions, all calculations, least of the following will be exempted. Some 3-4 exemptions will be there. So we have learned that for gratuity, we have learned that for pension, we have learned that for HRA, we are going to learn this for leave encashment also. Now one important thing you have to remember, if it's given to legal heirs of the deceased employee, it will be fully exempted for them. If an employee will die in service, then whatever leave is there at his credit, if they can encash that. So that amount, if it will be going to the legal heirs, meaning it will be completely exempted. Now the 4 points I told you, whichever the least value, actual amount received as leave encashment, that value, then 10 times of average salary. Now statutory limit of 3 lakhs, less any amount exempted earlier. So this, like gratuity, also we have learned that it's for the whole life. See, 3 lakhs is the statutory limit. Imagine he has encashed leave while in service. Then he got 1 lakh. as exempted amount. So this 3 lakhs will reduce by 1 lakh. So now their statutory limit will reduce to 2 lakhs. So any earlier exemption amount is given, you have to reduce that from the statutory limit. That point is very, very important. Less any amount exempted earlier, if any. Now leave at credit at the time of retirement into average salary. This and all I am going to explain with the help of problems. Now leave at credit, how you calculate? Number of years of service into 1 month. Say for example, 20 years of service I got. 20 years is equal to 28 months. So 1 year is equal to 1 month. See, I got 28 years of service. That is equal to 28 months. Minus leave availed and encashed during service. Imagine I encash 8 months of leave. So 28 minus 8, 20 will be my leave at credit at the time of retirement, 20 months. So number of years of service, that's very simple, it will be there in the question. If it's 20 years of service, 20 months. Minus whatever the number of days of leave availed, that also will be there in the question sometimes. Sometimes you have to calculate that also. Now average salary, 10 months salary preceding the date of retirement. Date of retirement meaning it's not preceding the month of retirement. Preceding the month of retirement we have computed for pension and gratuity. Preceding the date of retirement meaning if he is retiring in February 28th, that month also will be considered. So that you have to remember, this is a different adjustment. So preceding the date of retirement, it's not preceding the month of retirement. Now, what will be salary for computation of leave encashment? This is also very important. So salary is equal to basic pay plus DA if it's under the terms of employment plus commission based on fixed percentage of turnover. The same salary structure we are using for house rent allowance. So there also basic pay plus DA if it's entering into retirement benefits plus commission based on fixed percentage of turnover. When I'll do the problems, it will be more clear. Now, meaning of government employee for leave encashment. Who are all government employees? See, when we learn pension, we have learned that what are the classifications. So here also, who are going to get exempted if they are encashing leave at the time of retirement? Employees of central government and employees of state government. Nobody else. When we learn pension, it is 5 or 6 categories. So here it's only 2, either state government employees or central government employees. Now we are going to do the first problem. This is very simple. Mr. X retired on 1st July. That meaning 30th June onwards we will take the 10 preceding months. 30th June onwards. After completing 18 years of service. 18 years of service meaning it's 18 months. And received 7,50,000 as full amount of leave encashment for 15 months. You don't have to take that 15 months. Now his employer allows 45 days of leave for every 1 year of service. So every private sector employers have different strategies for giving leave encashment. So leave, they are allowing 45 days of leave for every 1 year of service. So here 1 year is equal to 1 month, meaning in this case 1 year is equal to 45 days. But here the calculation is simple because during his service he has already encashed leave for 12 months. So you know that he worked for 18 years, that meaning leave at credit is 18 months. And it's directly given in the question, he has encashed leave for 12 months. 18 minus 12, 6 months leave at credit is with him. So this you have to remember, this information is directly given in the question. So calculate the taxable amount of leave encashment if his salary during 1/7/2018 to 1/7/2019 was 50,000. So now why this is 1 year salary they have given 2018 to 2019. So I told you 1st July if he is retiring, 30th June onwards we will take. So June, May, April, March, February, January, December, November, October, September. So the same salary, there is no change in salary. So 50,000 is the average salary. Now we are going to do the problems. Table showing the computation of value of leave encashment. Already I have explained 18 years of service he completed at the rate of 1 month leave for, that is the allowed by the income tax department. His employer is allowing 45 days. We can take only what is allowed by the income tax department. So it is 1 month. 1 month for every completed year of service. So it is 18 months. Less leave already encashed while in service. It's given in the question 12 months. So leave due at the time of retirement, or we call it as leave at credit, that is equal to 18 minus 12, 6 months. There is another way of computing this. That is the simple way of calculating. If you want to calculate in terms of this calculation also, 18 into 12 minus 12 into 30 divided by 30, that is equal to 540 minus 360 divided by 30, that is equal to 180 divided by 30. Then also you are getting 6 months. Now you have to show the computation. So actual amount received is given in the question, 7,50,000 less exempt least of the following. Again, actual amount received 7,50,000, statutory limit 3 lakhs itself for whole life. Though he has claimed one leave encashment earlier, the exemption limit is not given in the question. Imagine exemption limit he got 50,000 is given in the question. Then this 3 lakh minus 50,000 we have to do. Here it is not mentioned, so we are taking 3 lakhs itself. 10 months average salary. We don't have to calculate that because here clearly it's given 50,000 salary for the 12 months, preceding 12 months. So 50 into 10, 5 lakhs. Now cash equivalent of leave at the time of retirement. Leave at credit was 6 months, 6 into 50,000, 3 lakhs. So which is the least value? Two 3 lakhs are there and one 5 lakh is there and one 7 lakh 50,000 is there. So least value is 3 lakhs. So taxable value is equal to actual received is 7,50,000 minus 3 lakhs, 4,50,000 will be taxable. Coming to the second problem, Mr. K retired on 29/2/20. 29/2/20, that meaning February. So we will calculate from February onwards. February, January, December, November, October, September, August, July, June and May. So May to February is the 10 months. 10 months preceding is February to June. Now you have to remember 18 lakhs he got as leave encashment for 16 months. Now he served for 20 years. So you don't take that first 16 months. He has served for 20 years, meaning 20 months he is eligible to get as per the income tax rule. And his employer allowed him 45 days of leave for every 1 year of service. He is in private sector employer can fix whatever he want to give it to the employees, he can do that. But when we will do the income tax computation, whatever is allowed by the income tax department only we will take. So 20 years meaning it's 20 months as per the income tax rule, because 1 year is equal to 1 month. So that is the calculation. His salary for the calendar year 2019 was 1,10,000. So we have seen that 2 calendar years, 2019 is 1,10,000 and it was raised to 1,25,000 per month with effect from January 1st, 2020. January 1st, 2020. So 2019 his salary was 1,10,000 and in 2020 January onwards he is getting 1,25,000. So his salary is due on the last day of the month. So he will get salary is due on the last day of the month. So February and January, the last day itself he will get the salary. So I told you 2 concepts are there for getting salary, either last day of the month or first day of next month. Here it is last day of the month. Compute the taxable amount of leave encashment. So leave encashment for 16 months. Now how he will do the calculation? So the earlier problem, how many months he has encashed is directly given. This problem, it is not there. So date of retirement is 29/2/2020. So from that month onwards we will take. So this is the thing you have to remember, from the date of retirement 10 months. So February onwards we will start counting. So now I have to show you the calculation how you are getting that salary for the last 10 months that I told you from May to February. May, June, July, August, September, October, November, December, January and February. So total salary for May 2019 to February 20. So May 2019. May they will get 8 months. May, June, July, August, September, October, November, December, 8 months. And 2020 he got 2 months salary. That is salary is paid on the last day of the month. So January and February he will get 2020 salary, that is 1,25,000. So total salary he is getting, total salary for 10 months is 11,30,000. Now average salary for 10 months. So that is 11,30,000 divided by 10, that is 1,13,000. Now leave at credit, how we have to calculate? 20 years he has completed, so it is 20 months. Now, leave availed while in service. So you have to remember that he is getting 45 days of leave as per the employer allowed him 30. So 20 into 1.5, you will get 30 months. So as per the income tax rule, 20 years is equal to 20 months. So his employer is giving him 45 days. That is 20 into 1.5. 13 months we will get. Minus, it's given in the question, first sentence itself. He has encashed leave for 16 months. So that 14 months is the leave at credit. Now, this explanation is given in the question. As per the employment terms, he is entitled for 45 days of leave for each year, which is 30 months. I told you 20 into 1.5. 20 is equal, 20 years is equal to 1 month is the income tax computation. This is his employer's computation. See, last problem we have not worked out. Directly 20 and that 18 and 16, 12 were given. So 6 months we can directly reduce. In this problem that information is missing. That is why we are calculating it. So 30 months in is 20 years of service. Question says he has received leave encashment for 16 months. Therefore, leave availed is 14 months. How you calculate? 20 months minus 14 months. 20 months minus 14 months. That is equal to 6 months. So, you got the calculation. 20 years of service is 20 months allowed by the income tax department. We calculated 14 months because his employer is allowing 45 days. 20 into 1.5 is 30 months. And it's given in the question, he is getting the leave encashment for 16 months. So the balance amount is 14 months leave is at the credit with him. So 20 months minus 14 months is equal to 6 months. Now, computation of taxable leave salary. So this actual leave salary received is 18 lakhs. Least of the following will be exempted. 4 points are there. Actual amount received 18 lakhs. Notified amount 3 lakhs for whole life. Though he has encashed while in service, that exempted value is not given in the question. If it is given, you have to reduce from this 3 lakhs. Now 10 months salary preceding retirement. We have calculated 11 lakhs 30,000. 2 months January and February in 2020 and 8 months in 2019. Leave at credit into average salary. That is 5 into 1,13,000. So that is equal to 5,65,000. So exempted leave salary is equal to, it is 6 into 1,13,000. It is 6 into 1,13,000. So the value will change. So exempted leave salary, but the value is 3 lakhs. Least value is 3 lakhs. So taxable leave salary is 18 lakhs minus 3 lakhs. It's 15 lakhs. So this, now third point, the last problem. Mr. G retired on 31/12/2019 after 20 years of service and received rupees 18 lakhs as leave encashment for 12 months. His employer allowed him 1.5 months of leave for every 1 year of service. He has already encashed leave for 18 months. So it's given in the question 18 months. So already he worked for 20 years of service, meaning 20 years is equal to 20 months. And he has already encashed leave for 18 months. It's given in the question. So leave at credit is 2 months. His salary for 2018-19 was 1,50,000 per month. And from 1st April 2019, salary was raised to 1,60,000 per month. Compute the taxable amount of leave encashment. He retired in December. So 10, including December, we have to calculate from the date of retirement proceeding. It's not the month. Leave encashment is the only exemption we are taking. From the date of retirement we will take. If it's fraction of the month, from that date onwards we have to take. So you have to remember December, November, October, September, August, July, June, May, April, March. So March to December, that is the salary for preceding 10 months. Now how we will calculate? Computation is easy. This is directly given just like the first problem. Leave due by taking 1 month per year of service, 20 months. Leave already encashed is 18 months. So leave at credit is 2 months. Now you have to remember table showing the computation of taxable leave salary. Actual leave salary received is given in the question 18 lakhs. Less exempt least of the following. Actual amount received 18 lakhs itself. Statutory limit 3 lakhs for whole life. The earlier exemption, it's not given in the question. If it's given, you have to reduce from 3 lakhs. 10 months average salary. That is shown in the calculation. Next slide I have shown how you are getting 15 lakhs 90,000. Now salary for leave at credit. 2 months into 1 lakh 59,000. It's 3 lakh 18,000. So which is the least value? It's 3 lakhs. So exempted value is 3 lakhs. Taxable salary is 18 lakhs minus 3 lakhs. It's 15 lakhs. How we are getting this 15 lakhs 90,000? 10 months preceding the date of retirement. I told you from March 2018 to December 2019. So March 2018 salary was 1 lakh 50,000. So from April 2019 to December, it's 9 months. So 14 lakh 40,000. 1 month only in March 2018. That is 1 lakh 50,000. So this total when you will take 1 lakh 50,000 plus this 9 month salary 14 lakh 40,000. You are getting 15 lakhs 90,000. So this is the computation. So 3 problems we worked out, and this I hope that it's clear to you. Now 3 problems we worked out, and I explained the theoretical concepts also properly. So you have to remember that while in service, if anybody is encashing leave, it will be taxable, whether he is in private sector or in government sector. But for central government and state government employees, if they are encashing leave at the time of retirement, they are entitled to encash 10 months of leave, 300 days of leave. 300 divided by 30 will be 10 months. It will be completely exempted. It's like another savings, like provident fund, gratuity, all that, pension. We have another savings. Encashing on our leave, we are making money out of our leave we accumulated. So that's a good concept. Then you have to remember that private sector employees, whether while encashing in service or at the time of retirement, if they are encashing leave, it will be taxable. So we learned the concepts for that. So that is how we are going to, and we have worked out 3 problems also. And I hope that this explanation is clear to you, and you will be able to do the problems with the help of this explanation. And write down the questions in your notebook. And first you listen to the video, then you do the problems on your own. If you have any doubt, again go back to the video and correct yourself. So this is the easy way to learn. So the more you practice, the more comfortable you will be. So that, wishing you all the best, and keep safe and stay safe in this lockdown period. This pandemic is spreading everywhere, so we are all worried about that. Keep social distancing, all that. Please keep safe and stay safe. May God bless you all. Okay, see you with the next module.